is the reason I have this t-shirt. The t-shirt is "Don't fuck this up." And "Don't fuck this up" is we are being given the gift. We need to take the gift. And the game is not to lose your tokens and not to do stupid stuff and not make money. I don't want people coming to complain they debased our currency and we didn't make money from it. We got poorer. No, you've got the opportunity. Take it.
Wait a minute, everyone. Welcome to Bitcoinzilla, your platform for daily cryptocurrency analysis and news. Our mission is to keep it simple. Bitcoinzilla offers engaging information that is easy to understand. Our analysts keep their eyes on the latest news to provide valuable insights via email. Don't miss out on this opportunity. Join our community of 10,000 subscribers and experience the new edge with Bitcoinzilla. Subscribe now. In today's video, Real Vision co-founder and CEO Raoul Pal discusses the latest market action and shares his key takeaways from how to save your future. Raoul explores the evolving tech investing landscape, the transformative impact of AI, crypto's role in shaping future wealth management strategies, and more. So without wasting any time, let's dive into the video.
The central banks are understanding that we've hit the debt limit globally from all the major governments, and their main job is to do one thing, and that's debase currency over time. It's called financial repression. And the idea is you debase currency so the value of your debt goes down. And also the value of assets optically rises, so the collateral, which is that base layer to any lending economy, is protected. Because if you lose the collateral that happened in the housing market in 2008, what happens is the whole house of cards comes down. So there's one game in town, and that's the Fed, the BOJ in Japan, the PBOC in China, the European Central Bank, the Bank of England, the Bank of Canada. Everyone's doing the same thing. And the aging populations exacerbate this because that has all the savings pools, so they can't let those people go bust either. That debasement has optically forced asset prices to rise. So what's really interesting, and again, I've talked about this at length before, is if you divide the S&P 500 by the Fed balance sheet or the GMI Global Liquidity Index, what you find is the S&P 500 has gone nowhere since 2008. And nor has gold, nor has real estate, nor have global equities. I mean, basically all assets have gone nowhere. And that's the world we all kind of feel like we're living in. Yet we see these equity markets rising. And we're like, well, my income's not rising. How the hell's this going on? My business isn't booming. Sure, some businesses are booming, but most aren't. And that's the magic of debasement. It kind of is a wealth tax on you and you don't really realize it. So your wages don't rise, costs of asset keep going up. Within that whole process of understanding the everything code, I did divide pretty much every major asset in the world. I was using gold and copper, everything, just like what outperforms the Fed balance sheet. Where do you put wealth? Now, most of these equities, S&P 500, for example, basically holds its value. So you're not getting worse off for that, but they're going up more than your wages, so you can afford less of them. So that doesn't help your future self because an asset is just future deferred consumption. But when I looked at the NASDAQ, it was like a straight line up versus the balance sheets. And it was outperforming debasement. And that got me down the route of the exponential age, understanding that technology is a mega secular trend. But beyond that is the ludicrous trend of crypto.
A federal judge sentenced former FTX CEO Sam SBF Bankman-Fried to 25 years behind bars for his multiple felony convictions, eliciting mixed reactions from many in and out of the crypto space. On March 28, Judge Lewis Kaplan had some harsh words for Bankman-Fried before and after announcing consecutive sentences of 240 months and 60 months, totaling 25 years in prison. The judge compared SBF to a thief, said his attempts to promote regulation of crypto was an act, found he committed perjury, and was willing to flip a coin as to the continued existence of life on Earth. The former FTX CEO has been held at the Metropolitan Detention Center in Brooklyn since August 2023, when Judge Kaplan revoked his bail for intimidating witnesses in the criminal case. A March 28 docket entry for U.S. District Court for the Southern District of New York suggested the judge would deduct time already spent in jail, meaning SBF would have a maximum of 291 months in prison, ending in 2048. According to Judge Kaplan, Bankman-Fried will serve the remainder of his time behind bars at a medium or low security prison in the San Francisco Bay Area. Reports suggested possible locations, including the Federal Correctional Institution, FCI, Hurlong, and FCI Mendota. It was unclear which one would house the former FTX CEO at the time of publication. Many reactions from social media following the March 28 hearing expressed doubt that Bankman-Fried would serve the entire sentence length. According to U.S. law, parole is no longer available for those sentenced to federal charges. However, inmates judged to have good conduct can receive 54 days off their sentence for each year served. In Bankman-Fried's case, that would mean a reduction of roughly 3.75 years, 21.25 years, served in total and less than 21 years after sentencing, presumably ending in 2045. The former CEO, now 32 years old, could be in his mid-50s even if he is released early for good behavior. The FTX bankruptcy case is ongoing in the District of Delaware, where debtors have submitted a possible plan to repay users based on prices at the time of the exchange's collapse. Judge Kaplan also handed down an $11 billion forfeiture judgment as part of Bankman-Fried's criminal case.
Crypto, and I've talked about this from every angle to try and get people to understand, is a life raft out of debasement. It's a new financial system being built. It's an entire network of the Internet of Value that we get to own a fractionalized share of, whichever country we're in. It's the same globally homogenous product. Everywhere in the world, we all have an equal chance of putting 10% of our paycheck in this massively fast-growing asset. It's the fastest-growing fastest-growing asset class of all time in terms of number of people using it. It's the second fastest growing technology in history, only just being bettered by AI recently. But beyond that, it's faster than the internet. And it's like owning a share of the internet. That's the magnitude of what it is. It's currently a $2 trillion, $2.7 trillion market. I think this cycle it ends up at 10 trillion on its way to 100 trillion, 200 trillion. That is a big mega trend. With the debasement of currency, the adoption of a new system, and the fact that it's a life raft from the old system, that creates this supermassive black hole that sucks in capital. And it outperforms everything. It's the biggest macro trend and bet of all time, which is why I dedicate so much of my time to it. And on a risk-adjusted basis, it outperforms every asset. It's like an alien asset class. There's just literally nothing we've ever had before has had this performance with this little risk, even though it goes up and down. It's like 70 or 80% on the downside and then up, 10x on the upside. Still, on a risk-adjusted basis, it's the best risk-adjusted asset in the world. I mean, Urian Timmer from Fidelity produced an amazing chart which shows all of the risk-adjusted assets and then Bitcoin, the top right. It's like it completely doesn't exist in the same framework as anything else. So anyway, this massive trend is the reason I have this t-shirt. The t-shirt is don't f**k this up. And don't f**k this up is we are being given the gift. We need to take the gift. And the game is not to lose your tokens and not to do stupid stuff and not make money. I don't want people coming to complain they debased our currency and we didn't make money from it. We got poorer. No, you've got the opportunity. Take it.
Bitwise Chief Investment Officer Matthew Hoogan said institutional investors would likely inject as much as $1 trillion into Bitcoin through exchange-traded funds, ETF, as they slowly move into crypto. In a memo sent to investment professionals, Hoogan addressed concerns over Bitcoin's price volatility. As the asset bounces between $60,000 and $70,000, the executive said the best approach would be to keep calm and take the long view. While the price seems unstable in the short term, Hoogan noted many key events to look forward to in the coming months and years. Hoogan said that while the space waits for these key events, the BTC price would likely chop sideways whenever there are small changes in sentiment. However, the investment officer believes things would be different long-term. Hoogan wrote, "But long-term, we believe Bitcoin is in a raging bull market. Not only is it up nearly 300% in the past 15 months, but there are strong reasons to think that will continue." According to Hoogan, the spot Bitcoin ETF approvals in January opened crypto to investment professionals in a major way. He also believes that investment professionals who control trillions of dollars are just starting to move into crypto. Hooken highlighted that onboarding more professional investors would take years, not months. The executive also said that the $12 billion flowing into ETF since their launch is exciting and is the most successful ETF launch of all time. However, he believes that once global wealth managers begin to allocate 1% of their portfolio into Bitcoin, this would mean $1 trillion in inflows into the space. A 1% allocation across the board would mean $1 trillion of inflows into the space. Against this, $12 billion is barely a down payment, he added. And do not forget to subscribe to Bitcoin Seller. The most important news will reach your inbox on a daily basis and for free. I do not know why you have not subscribed yet. If you like the video, give it a thumbs up and subscribe for more daily updates. Remember, knowledge is power, and we're here to empower you on your financial journey. Until next time, happy investing.